The wall silver hits this weekend. Watch the price closely. Data released today shows that silver will hit a wall this weekend. I'm going to break this down for you and show this is the data we need to be following. I'm going to help you so you don't get left behind. There are patterns to the price of silver, and in this video, I'm going to show you how this works so you're prepared for the massive changes that are happening in the price of silver. This is from Reuters, and it says, Wall Street has been betting that the Federal Reserve will be able to tame inflation while keeping growth from declining too rapidly. While that outcome was in doubt as recently as last month, investors have been reassured by a more recent spate of economic data, including Wednesday's report showing U.S. consumer prices slowed more than expected in April. Investors' newfound renewed penchant for risk-taking can be seen across asset classes. The S&P 500 hit a new record high on Wednesday and is up 11% year-to-date as it rebounds from last month's decline. The Nasdaq and Dow Jones Industrial Average scaled fresh heights as well. Now, this tells us that we've seen we broke $30 for silver, right? This morning, we're solidly at $30, very excited about it. And at the same time, since data came out Wednesday, the economic reports that were released, Wall Street was very happy about it, feeling very confident. They're feeling that the economy is growing. They're feeling that inflation is getting under control. Their confidence is making them take more risks. When all of this happens, people are pulling out from silver. This silver that I'm holding in my hand, that we're so excited about, this silver that we're waiting to push up to $35. Well, here's the wall that silver is going to hit this weekend, because this happens over and over again. I'm not a financial advisor. I'm just a silver stacker. I'm just a regular guy, but I've been in this for years and years. And this is what happens. First, if you're on the fence about going in and buying this weekend, I'd say wait, hold off, because silver is going to hit this wall. This is what happens. Silver has an inverse relationship with the strength of the economy. And when the economy is showing strength, like these past 48 to 72 hours, when it's showing strength and Wall Street is taking more risks, that's our sign. That is the data point that we need to look at, because that shows that people are going to pull out of the safe haven of precious metals, like I'm holding here, this silver. They pull out of that and they take more risks, and that brings the silver price down. Let's keep going. This is again from Reuters. It says, assets such as Bitcoin and meme stocks, which are often seen as barometers of risk appetite, though their ties to economic fundamentals are often questioned, they have also soared. So we're seeing these high-risk investments soaring with meme stocks and Bitcoin. Meanwhile, according to this article, participants' growing confidence was reflected in a survey of fund managers by Bank of America Global Research, the firm's broadest measure of investor sentiment based on cash levels, equity allocations, and economic growth expectations. It stood at its most bullish since November 21. Wall Street is confident. They're taking risks and they're bullish. This is exactly what we need to look at. I know a lot of people are seeing silver get into the $30 range. To say that it is a fear of missing out is really not accurate. It's just excitement over what newbies might feel, somebody who's not been in this game of stacking silver. It's an excitement over the success of an investment. That's what they think of it as. But stacking silver is not an investment. It is the opposite. It is a safe store of wealth. And as our economy shows strength, which clearly this week is showing us that this data is showing that inflation is being pushed down, the economy is expanding. This is exactly what we want to see. That makes the price of silver act in a reverse way. And that's the wall we're absolutely going to hit. It typically has a lag. The lag is typically 24, 48 hours, maybe 72 hours, but we eventually hit that wall. That is the history of silver. Let's keep going. This says, after worries of the Federal Reserve's ability to cut interest rates in the face of stubborn inflation prompted a 4.2% pullback for the S&P index in April, investors now appear eager to ride stocks higher. Many are opting to do so with little attention to hedging their downside. The CBOE volatility index, which measures demand for protection from market swings, it closed at a 4-month low. And another one of these indexes closed at the lowest level in about a decade. That tells us that the confidence of Wall Street is really something that we need to look at. And when this happens, when Wall Street is feeling confident taking those risks, that's what we as silver stackers need to look at, because this is not the time to pull the trigger and jump in and start buying. We're about to hit a wall, and when we hit that wall, silver will come back down, and then it is time to jump in and buy. Look, we as a community of silver stackers, we live in this strange world where, yes, we want the economy of our country that we live in. We want our economy to be healthy. We want everything to go well. But at the same time, for silver and for gold, we need the opposite. It's really quite strange. There's nothing else like this on this planet. We actually need the economy to contract. We need the job market to struggle. We need inflation to rise in order for gold and silver to increase in price. It's really strange, but that's what we need. So we're stuck, because if we're honest with ourselves, that's really what we're dealing with. Again, I'm not a financial advisor. I'm just a silver stacker. This channel is not, there's no silver dealers, no online bullion dealers that are telling me what to say on my channel. Like, I can say whatever I want. And really, that gives me freedom to tell you that that's the struggle that we're in. We really want things to go badly. It's kind of sad, because that helps the price of our precious metal. But when things go well, which is exactly what this data is showing us this week, things are going well. We're seeing strength in the economy. We're seeing the numbers that we want to see to have a healthy economy. That is a wall that silver hits. And it may take 48 hours, it may take 72 hours, but we will hit that wall, and then the price will come down. Look, there's people that are completely against this. This is from Yahoo Finance. This came out today, and this is from Jamie Dimon, and he says, and he's saying the opposite. He says a lot of inflationary forces are actually in front of us. This is, and Jamie Dimon is from Chase Bank, and he's from J.P. Morgan Chase. He's a chief executive officer, right? And this article says that the J.P. Morgan chief executive officer said significant price pressures continue to influence the U.S. economy and may mean interest rates will be higher for longer than many investors are expecting. He cited costs linked to the green economy, remilitarization, absolutely true, infrastructure spending, yes, trade disputes, and large fiscal deficits, right? He mentions all of those to say that, look, even though Wall Street is feeling confident and jumping in, taking these risks, he sees the opposite coming. And again, for silver stackers, that's actually good news for our price of silver. All of these aspects that were just listed will boost the price of silver up. The green economy, remilitarization, infrastructure spending, trade deficits, large fiscal deficits, all of that. That is all disruption to the healthy economy. And when there's any disruption to a healthy economy, when there's any uncertainty, that's when people go into silver and they start swapping out their fiat currency, like we in our silver stacking community, like we've been doing for years. And it gives a push to the price of silver. This article continues, the S&P 500 and NASDAQ 100 closed at record highs Wednesday amid optimism over monetary policy easing after a measure of underlying U.S. inflation cooled in April for the first time in 6 months. Diamond said that markets have been healthy for a while, but that doesn't necessarily predict the future, he says. If you have higher rates and, God forbid, he says, stagflation, you will see stress in real estate and leveraged companies and private credit. And that's everything in that statement is what we're already seeing, right? We're already seeing stress in real estate with these enormous mortgages that people can't take on. People are putting their homes on the market more than ever all throughout the country, and those homes are not being bought up. Leveraged companies, absolutely, and private credit is through the roof. He goes on to say, stocks are very high, and I think the chance of inflation staying high or rates going up are higher than people think, he says. My view is whatever the world is pricing in for a soft landing, I think it's probably half of that. I think the chances of something going wrong are higher than people think. So that's Jamie Dimon actually giving Wall Street a real taste of what he sees as reality. And for us as silver stackers, we're going to have to see this play out as the next 24 hours to 48 hours unfold.